It is Saturday, August 27th. I almost forgot to write that down. 27th. Sorry about that. This is your daily financial news. This is a news show we do 7 days a week for more than 1,000 days in a row, 12 to 15 minutes. Let's get into the hot topics. So I just did about a 12-minute live stream about Jerome Powell. Go ahead and watch that for kind of my thoughts on what it means. How do we test his resolve? And what does it mean for the housing market? In short, I will admit that Jerome Powell yesterday did what I have been asking for. If you've been on my channel for more than 4 months, you have heard me beg, plead, rant for Jerome Powell to walk up to Mr. Stock Market and kick him in the nuts. He has, for whatever reason, resisted that urge until yesterday. Yesterday's the day. In 8 short minutes, he said, I'm in charge. Stop your whining. More pain ahead. Now, we will see if his resolve withstands the test of data. We do get the next federal meeting September 21st, so we will see. My belief is if Jerome Powell and his cronies give us 75 basis points for a third time, he is serious. If he delivers us 50 basis points, talk is cheap. We will see. At least for a day, I want to thank Powell for doing his freaking job. We have to stop ripping this Band-Aid off slowly. We need more pain. I would much rather have pain in a short window than a long, stretched out window. That's me. I think yesterday was the first step of many steps in the right direction. We need more, no question. But I, as someone who is, ranted, I want to take a day and say, nice job, clear and concise, thumbs up. At least for a day. I've taken plenty of shots at Jerome. I want to give him a pat on the back and say, nice job. I didn't think you had it in you. We'll see September 21st. Now what? We as real estate investors and probably stock market investors, I'm not in the stock market, but I think the thesis holds. I think what we need to plan for, folks, is actually my greatest fear. I did a greatest fear video earlier in the week, and it was basically this. The real estate market knows how to act at 6% mortgages. It's not fun, but we can move our way through. I believe what Jerome Powell said yesterday, we are going to take the funds rate not to 3%, not to 3.5%. We are going to 4% or higher. So, as a real estate investor, if you believe the federal funds rate is going to 4%, what does that mean for the 10-year? Well, 5.5%. What does that mean for 30-year fixed rate mortgages? Probably 7%. So what happens at 7%? We have more buyer demand destruction. We have more seller destruction. It is that wicked combination of both demand and supply destruction that is the Fed broke housing, that is a transaction crash of 30 to 50%. Housing is in a depression and going to get worse, not better. The economy will be pulled into a recession because of the transaction crash. Less building, less remodeling, less transactions, less appraisers, less inspections, less. Recession inbound. That's what I see. So again, I think the Fed's fund rate gets to 4%. The question is, when? So play this out with me. Let's just assume for a minute Powell does what he says. It's a guess. It's a game. Let's just play the game. We are at 2.25 today. Powell steps up, bangs the market on September 21st. We go to 3%. I think the next meeting after that is October. Bang, hits the market again. We go to 3.5%. Could we really be at 4% in December? Wow. Or do we get there January or February? This is the road we're on. We are on a road where the federal funds rate is going to 4. It is going to cause plenty of pain. What does pain look like? Well, we've already talked about the housing market. Let's talk about the stock market. Well, the stock market generally is a combination of price to earnings multiple and earnings. And oh, by the way, let's not forget that these higher federal funds rate is going to make the dollar strong. This is not going to be fun for the stock market either. We are going to get more and more people who take the unadjusted or the riskless return of treasuries. The 10-year treasury could be 5%. We are going to get flooded with international dollars. The rest of the world, Europe, recession. China, recession. This is wild to think about. Then you get all these international companies that lose 0.5% per Taylor, who we talked to on Mondays, for every 1% gain in the dollar. Can you imagine how strong the dollar will be when the Eurozone is in a recession? It is going to be painful. And then for all the companies that only exist because they can borrow money, good luck. There are companies in Cathie Wood's ARK K that will not exist in a year. They will likely get bought for parts. This is what happens when you have a company that doesn't produce cash flow, it relies on debt, and you're paying for growth. In a bad market, you go bust. More pain ahead. And finally, unemployment is going up, folks. Unemployment is going up. We currently sit at 3.5%. We get a reading on Friday. Friday is a test. Friday's, it will be August jobs number. Remember, the July jobs number was a barn burner, over 500,000. What's going to happen on Friday? If we get a good, this is going to be, dude, we are in a weird time. Good news is bad news, let me tell you. On Friday, let's say we get another great jobs number, say 400,000 plus. That is good news, right? It's good news, but it is bad news because then the Fed goes, we got to punch the market in the nose, give them 75. This is where we are. This is where we are. So crazy, crazy stuff. So inventory, again, my greatest fear, rates go up, but inventory falls. I believe all of the housing crash, all of the housing price crash channels, they have to be banking on inventory growing. They have to. It's the only logic they have. According to Redfin yesterday, and I'm going to bring up this article and do a deep dive on it hopefully later today. August inventory, as of yesterday, fell 15%. As I told you, my greatest fear, rates up and inventory rolls over. Housing is seasonal. The Fed broke housing. If we end August, and then September is less than August, and October is less than September, your hope for this great housing price crash, it's just no transactions or very little transactions. It is, I can't tell you, the Fed broke housing like the 1980s. Folks, go look at the 52-year spreadsheet. Go look at what happened the last time the Fed doubled the funds rate. It's in there, plain as day. The numbers, the data sources. Go look it up. Inventory or transactions crash. New home construction, crash. Existing homes, crash. Not price. It's right there for you. You can choose to ignore. You can choose to whine. You can choose to say I'm an idiot, but it is right there for you to look at. Dan Bird, who we talked to on Sundays, who we should be talking with tomorrow, reminded me of something, and I read it again this morning. I actually, if you would have asked me yesterday, actually, I guess last week, what was the worst month for the stock market, I would have said October. Just guessing. That's the 87 crash. There's been a couple of other very bad days in October. But historically speaking, over the last 70 years, September, folks, is the worst month of the year. And now we've just had Powell kick the market in the nuts. We've had more and more companies reduce earnings. September could be ugly. We could be testing the June bottoms. Buckle up. And then inflation. I want to remind you about what Jerome Powell said yesterday. I went and looked this up. In Jerome Powell's speech, it wasn't only, hey, I'm in charge, we're going faster and higher. It was also, we are not going to make the mistake of cutting early. So I went back and looked at the period that Jerome Powell referenced. Paul Volcker takes over the Fed August of 79. By April of 1980, he has taken the funds rate from 11 to 17.5. What happened in the summer of 1980 is inflation came in. So Paul Volcker and the Fed took the 17.5% funds rate and whacked it to 9. They thought they had it beat. They were wrong. If you look at the inflation chart, there's this big shark tooth. It goes up, comes down, and goes up higher. These double dip recessions, you must kill, extinguish, defeat inflation. You can't cut early. Jerome Powell tells you they are not cutting early. Go look at the data. It is right there for you. It is right there for you. So again, pretty crazy stuff. So a couple of quick things. Let's make some announcements that I forgot about yesterday or the day before. Again, folks, you guys are doing deals. You are doing great deals, and I want to send you a card. So Vlad, congratulations for getting your deal. Kirby, congratulations for getting your deal. Kirby, looks like you got 2. Congratulations for getting your deal. And Nathan, congratulations for getting your deal. If one rental at a time helped you in any way, buy a house, house hack, anything, Airbnb. If I've helped you and you want to get one of these, let me know. I just need your address and I will mail these off. And then Joaquin, congratulations. You found an Easter egg on my website where you can get my black shirt that says, I use inflation to get rich. So your shirt will be going out in the mail probably Monday. I don't like to go to the post office on Saturday. Too many people. So I go on Mondays. And then finally, some of you asked me to create a t-shirt with one of my phrases. So I just got this in the mail. I ordered some samples. So I wanted to share them with you. First look, I have not even looked myself. Nailed it. You've heard me undoubtedly say that a couple of times. It says nailed it. Any questions? So I bought some color. I actually have a wall with all my t-shirts. I like the light blue. I think I got a red too. I did. I don't necessarily look good in red, my pink cheeks, but there you go. It's got my purple. Nailed it. Any questions? I forget who it was. I wish I knew. One of you said, hey, you should create a t-shirt that says nailed it. I like it. So we did. And then it has my logo on the back. I think that's it. I think those are the 2 colors I bought. Yep. Light blue and red. All right, folks, we're going to do live Q&A. I don't know, probably 10 minutes or so, 8 a.m. Join early if you want your questions answered. If you join late and you want me to answer your questions, if you super chat me, that's how you could jump to the front of the line. I use super chat because YouTube gets paid. And when YouTube gets paid, my channel gets more views. So I had to turn on super chat. So we'll talk to you in a few minutes. And if you're one of my students, we will do a Facebook Live at 9 a.m. for 30 minutes. So have a wonderful day. It is Saturday, August 27th. Let's celebrate Jerome Powell for a minute doing what he was supposed to do, taking control of all this. I'm excited. Let's see what happens. Bye.